Good morning, ladies and gentlemen. This is Greg Michalowski from FXDD. This is Tuesday, March 23rd, 2010, New York Morning Forex Report. Traders should trading Forex is risky. Should only be done with risk capital. Not change your lifestyle. Traders could lose all their risk capital trading Forex. FXDD does not guarantee any recommendations made within its commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, financial condition. In addition, care should only be made to use leverage which is congruent with your personal risk tolerance. So no care was taken in creating the support. FXDD does not guarantee the accuracy of the information. Well, overnight we did see the euro move lower once again. The excuse given is the usual that the Greece situation is not going to be resolved, and there's blah 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 blah. So we see the euro move down here today. It occurred mainly during the Asia, at the beginning of the end of the Asian sessions, early the European session. We saw the market initially moved down, I guess, during the Asian session, then bounced back up toward where it was near the 100-bar moving average on this 5-minute chart. We told you to, kind of pay attention to these shorter-term signals. We use this level as a support. You can see that pretty clearly where the 100-bar moving average was used as support during this period. And then we started its trek to the downside here. We had 135.46 as kind of a support level for this currency pair. We broke through the 200-bar moving average on the 5-minute chart, and that prompted the move to the downside here for that currency pair. Sold off pretty sharply against the euro sold off pretty sharply against the dollar. And then we get this, the typical move back to the upside here. Let's put a Fibonacci from today's high to today's low to see how that retracement stacks up against the Fibonacci retracement levels. And you can see here that the market corrected about 50% off of the lows and is now heading back down as New York enters the fray. Taking a look at the hourly chart, we remain down toward the bottom. We do have support down here at 134.98. That was this low right here. We have this floor right here. The 135.13 level is another level that we've been paying attention for the for the euro versus U.S. dollar. We used that as support yesterday, and we actually fell through that support yesterday and moved back up using it as a level to push to the upside here off of this hourly chart. Today we again are back below that level here, so we have this 13 level, and you can see how it's been important here in the 5-minute chart. Initially came down to it, broke through it, and then use it as support here, use it as support here, now breaking through it again, and as New York enters, looks like we're going to head toward new lows here for the euro versus US dollar. We'll catch up to that at the end of this report, see how things are developing. Taking a look at the sterling versus US dollar. We drew these trend lines in yesterday. This first trend line, let me zoom in here. This bottom trend line connects these lows right here. 1, 2. We had a low here and then broke through it, and then used it as support right here to move to the upside. And right now we're testing that level again. We also had a trend line connecting these lows here, and you can see yesterday we went up and tested that, and early today went up and tested that top trend line before moving down. So taking a look at the closer picture, if I zoom in now, we can see how the market is basically in between those two, but we are testing this bottom trend line. This bottom trend line currently comes in at the current price level at 149.87. So if we see the market break through that level, should see further moves to the downside here toward the 149.30 level, which was yesterday's low in the sterling versus U.S. dollar. Taking a look at the longer term chart, we're also along. This is that trend line right there. But the next support line comes in at the 148.66 for that currency pair. Taking a look at the daily chart, off the 5-minute chart, again we saw the market use the moving average here as a level to sell against. We started to sell against the 100 bar moving average here, and then use the 200 bar and the 100 bar as resistance here on this little second chance to sell the market, and boom, off to the downside here for that currency pair. We are now through 61.8% back down to the 50 level and making new lows here, so we are breaking that trend line. The dollar versus Swiss, we had comments from Hildenbrand from the Swiss National Bank about the level of excessive strength in the Swiss franc, and we saw the dollar Swiss move higher on that, breaking above the 200 bar moving average. 200 hour moving average came down, tested the 200 hour moving average, and now is trying to do the same thing, still at the 200 hour moving average of 160.1 on that currency pair. On the 5-minute chart, we're seeing a lot of choppy action in the dollar versus Swiss over the last couple of days. Up, down, down. In this last move to the downside, we did hold our confirming 200 bar moving average here, and moving higher as the dollar gets stronger here in early New York trading. The Euro Swiss saw the move to the upside here on the hourly chart, but back down. This is near 2000. This is near the lows. I'm going to put this on a weekly chart. The lows going back to this period right here, which was October 2008, and that's the all-time low for the euro versus Swiss, and we're testing it as we speak. Basically, the low at that time was 142.99, and the current low is about 143. So we're testing the all-time lows for the euro Swiss. Breaks through that. I could see further pressure in that currency pair. The dollar versus yen held the 100-day moving average overnight. The low came in at 190.05. The 100-day moving average comes in at 90.06. So that continues to be a key level for us on the downside. Off the hourly chart, we are testing the 100 and the 200 bar moving average. The 100 bar moving average comes in, or 100 hour comes in at 90.35. The 200 comes in at 90.42. You can see how the market's been, wandering around up and down. For the dollar versus yen, the key level on the top side, put this line in your chart around the 90.72 to this high was what, 90.79. So really 72 to 80. If you look at the highs, break the high, fail, break the high, fail. So that we ultimately have to get through that 72-ish type area. If we don't get through that, then the market can't go higher. But the first thing we have to do is get through the 200-hour moving average. You can see we finding some buyers against or sellers against the 200-hour moving average here on the top side for the dollar versus yen. So we're going to have to see that break to the top side. On support here, we have seen support against the 100-bar moving average in recent hours here for the dollar versus yen. So that's a positive sign after having moved down through the 200, move back up toward test the 100, and then move through the 100. So now we're finding perhaps that we may bounce, find support, find a springboard to the upside for the dollar versus yen. That's your key, this is your key level, 90.29, folks. Dollar versus Canada on an hourly chart. We broke through the 200-hour moving average. That's the first time since March 1st. On yesterday, market moved up, came down, tested it, and in earlier Tokyo session we did, Far East session, we did see the market move below that 200-hour moving average, but that was quickly reversed. And the last time it came down to test it, we bounced again. So this is also finding some support against some key technical levels for the for that currency pair. And the 200-hour moving average comes in at 101.73. It's going to be a key level on the downside. Going to be a stop if it goes through that level on the downside. See further pressure for that currency pair. Taking a look at the 5-minute chart. In that chart, the two moving average and then price converged. That's what Call 3's company, and we're seeing this move to the upside, where the market says, I don't want to stay around this area where two moving averages and the price are at the same level. That's not good karma. I'm going to move away from it, and they chose to move to the top side. We do have these tops here that will form resistance here for the dollar versus Canada. Today's high came in around the 102.10 or so level, and that was a high right here. So we're going to be looking for the market to break through that level in order to push the dollar Canada higher. This high actually came in at 102.12. Finally, take a look at the Aussie versus US dollar on an hourly chart. This is having some pressure here. The Chinese yuan rose a little overnight. Just spilled a little coffee. Rose a little overnight, and that may be a prelude to further tightening down the road, which is not good for Australia. We already saw India tightening their credit situation, and that caused this sell-off in the Aussie. But we had this correction right up to the 100-hour moving average, and now back down. So that's my morning report. We'll talk to you later. Bye-bye. This is Greg Michalowski reporting for FXDD, and we only have existing home sales coming out of the U.S. here today. So that's the only key economic data that is due for release. Canada has leading indicators due at 8:30. Expectations of 0.9. That existing home sales for the U.S. is due at 10 a.m. Expected 5 million annual pace, which is down 1.1% from last month. Richmond Fed Manufacturing Index is also due at 10. Expectations of 5 versus 2. Bye bye now.